to Earnings Corner now, and financial consultancy IFCI has posted an 87% rise in its profits for the third quarter. Malan Mukherjee, CEO and MD of the company, now joining us, and let's go across to Latha, who will take us through the interview. Hi, Latha.
Thanks, Alan. Mr. Mukherjee, thank you very much for joining us. You have reported a fairly big jump in your net profit from 76 crore year ago to 142 crore year ago. That's almost an 80% jump in profit, and total income also going up from 638 year ago to 790 crore. That also is about a 16-17% rise. Mr. Mukherjee, first up, how have margins panned out? Because I'm not able to get an idea of your earning from interest and your cost of borrowing. Your cost of borrowing apparently has gone down year on year. But how much did you, what is your yield on loans, and therefore what is your margin?
Well, yield on margin also has greatly improved. Basically because of the one reason is that my cost of fund is first got reduced, but my base rate, first time we have introduced in IFCI, which is called as the IFCI base rate, is based on cost of funding plus my incremental expenses on what we have, overhead expense and all that. So with that, my yield has improved. At the same time, cost of fund has come down, and also my operating expenses has come down. So everywhere there is improvement.
But how come your cost of money fell, Mr. Mukherjee? Actually, from quarter on quarter it has gone up a bit. But give us an idea of the margins. What is your margin?
No, as I'm talking, as I am talking of the percentage wise, because earlier the sum of the money which was raised by IFCI was at a much higher rate. Now I am able to raise money at base rate or maybe base rate plus 0.25% from the various banks. So that's what I say, my cost of fund has come down. And at the same time, because of introduction of the base rate in the IFCI, my cost yield has gone up. That's why you are seeing the...
Can you give me the number? What is the cost of funds in the last quarter, and what is your margin?
Well, cost of fund in the last quarter, I will have to check that number and come back to you.
But your margin approximately, would you have your margin?
Yeah, my net interest margin is now 3.6% compared to 2.7% earlier.
2.7% was year ago, I would assume?
Yeah, now it is 3.6.
Okay, and what was it a quarter ago, second quarter if you have them?
It is 2.2.
From 2.2 in the second quarter you came to 3.6?
No, 2.2 to 2.7 and 2.7 to 3.6.
Okay, 2.7 was which quarter? I mean, I'm asking you for the...
Last quarter.
June-September quarter?
Last quarter was 2.7. Yeah, June-September quarter was 2.7.
Okay.
Now it is 3.6. Okay. 1 year back it was 2.2.
Got it. You wouldn't have an idea of how your yield on earnings improved?
I don't have the numbers with me, but obviously I can.
All right. Can you take us through the bad loan picture? What is your gross and net NPL this quarter?
This quarter we have added only one NPA.
How much?
At the same time we have recovered, that was around 200 crores or so.
Okay.
But mostly there has been good performance in recovery of advances, old NPAs, and that's why you are seeing the gross NPA has come down and the net NPA also has drastically come down.
No, I don't have those numbers. Can you tell me your gross NPL and net NPL?
Yeah, gross NPL is 16.2% and net NPL is 9.5%.
No, you wouldn't have the aggregate numbers?
I will not have individual numbers, but I have the numbers percentage wise.
Okay, and what was this gross NPL in the previous quarter, September quarter?
19.5%, and net was 11.3.
Okay. What is your sense about the current quarter? Are you expecting more cases to come in for flipping to NPL?
I will have a better result in this quarter for very frankly reason that earlier NBFCs were not allowed to restructure book and keep it in the standard asset. That's why when I said this number, you would have felt that compared to the banks, why these NPL figures are so high. Typically, all the NBFCs were not allowed to keep the book as a standard asset even if it is restructured. Now in the month of January, RBI has given a dispensation, and at par with banks, when I restructure a book and if it is a standard asset, then it remains as a standard like banks.
Okay.
So this quarter, whatever assets I am restructuring, if at all I have to do the restructuring, which some of the companies need it, in that case my book will not be impaired at all. Whereas in other case, if that would not have come, that would have hit my balance sheet very badly.
And IFCI, if I remember right, I spoke to you about IFCI. I'm sorry, I spoke to you about
Yes.
Enron or Dabol. What is it in your
spoke
books?
about Enron, yeah.
Yeah, is it a bad
No,
loan in your books?
Enron, as I have told you that day, I told you till March I have not an issue. I have a very small amount which has to be received, and I am in touch with IDBI for that reason. As you know, NBFCs make the account NPA only after 180 days of impairment. So as such,
They have not paid you interest for which quarter?
They have not paid for the June quarter.
Okay, then
Sorry, they have not paid for the September quarter.
September and December quarter as well.
December quarter as well.
So by March it could become an NPL. How much is the amount?
It could become. For amount of recovery is very small amount. Amount of recovery, what I have to do, I am very sure that there is no question of not getting it. It is a very small amount because they have paid to all the banks.
Okay.
So there is no question of IFCI alone not being paid.
Okay.
And IDBI being the lead is taking care of that.
Okay.
And absolutely, I am not taking that as any concern for me. Last time you have quoted that
Okay, you said
IFCI
you said
not
200
bothered
crore.
on that.
Okay, Mr.
Yeah.
Mukherjee, otherwise, how is the NPL picture likely to pan out? Will it be less than 16.2% in the current quarter you expect?
Obviously, yes. I can say the last time when not you, there is some other channel interviewed me, I said the December quarter result when I give you, my NPA, net NPA will be below 10, it's below 10, and March I am expecting it to be below 7.
Okay. Finally, have
Net
you been
NPA.
invited by the Jalan committee to speak about your licenses? They have been meeting people.
No, they have not, but they have done the due diligence with me. They have come, their team has come and done the due diligence, so I am waiting for the term.
Okay, you haven't been called by the committee, is it?
Not yet, no.
Your subsidiary, Transport Finance Corporation, has also applied for a bank license.
Yes, TFCI has also applied for license.
Okay.
Tourism Finance Corporation. Tourism Finance.
Tourism, sorry. Tourism Finance has also applied. Okay.
Yeah.
Have they been invited, would you know?
No, they have not been invited. Of course, I know that. They have
When
not
do
been
you
invited.
expect
I
to
am
hear
on
from the
board.
Jalan committee? Any idea?
I don't think there is any roadmap for that, for calling which people when.
Okay.
So I don't know.
All right. All right. We'll leave it at that, Mr. Mukherjee. Thank you very much for joining us.
Okay. Thank you so much.
All right, back to you, Elan. Actually, a good set of numbers, considering that they have gone through some severe bad loan problems. 16.2 is not a pleasant number, but it is only more pleasant than the 19.5% gross bad loans that they had in the previous quarter. So things are on the mend for IFCI, or so it seems.
Right, and the stock also reacted well, at 2.8% higher at the point of close. So on that note,